actually covering the central banking thematic area, the CF. So I will be with you throughout the webinar, moderating, not presenting. We have Cilka Ferjancic with us, who will be presenting on the topic. However, also on the CF side, we have David. You heard him before. He will be technically supporting us, and also Ivana, who is with us and was successfully promoting this webinar. We have received over 60 applications, so that's really nice to see. We are 37 now. I hope some other also join us on the way. Yes, and before we start, actually, most of you have already discovered the chat box. If you don't have it, if you don't see it, it's the icon for it. You can find on the lower part of the screen. So that would be the fifth icon, where you can then write to us. You can maybe write hello, how it is. David already encouraged you to write where you come from, where you're connecting from, and share how it's with the weather with you. Actually, I had to, just before starting now, I had to unclog the canal for the terrace because I would be flooded otherwise. So that's for it. Today we will be speaking about benchmark interest rates. Actually, this is something that we want to update you on, and we plan to have such webinars even in the future, because this is somehow an ongoing issue. So we plan also to include this in the central banking program for the future. As far as Cilka Ferjancic, maybe some of you already know her. She has been with us at several events, workshops, webinars as well, on monetary policy implementation in the Euro system. And she's coming from the Bank of Slovenia within the banking operations department. I would like to ask actually David, just to give us a little bit of feedback from you, the participants, that we see where you stand with the topic, how much you have been exposed to it, how closely you're following. So we'll make a short poll before we start the webinar. David, can you please start it?
Yes, of course. I will open a question now. It will pop up on your screen. You will have four options to answer, A, B, C, and D. And let's say about a minute to think about it. Then we'll see the results. So in 3, 2, 1, you should be able to see the poll now.
You have to choose A, B, C, or D and submit as well.
And click submit. Yes, exactly. Thanks. We have 10 answers already came in, 12 now. Okay, good. We will wait for, let's say, another 15 seconds for you to just click on A, B, C, and D, and don't forget to click the button submit. Otherwise, we won't see the results. Okay. A few of you left. Okay, almost 30 answers now. So that's most of the participants have answered. So in 5 seconds, somebody doesn't see it. So the question was, maybe Matteo, you can just repeat the question. for those that maybe are in the chat with us.
If you don't see it, it should be under the chat box, right? The poll.
Yeah, Paul, you maybe
Right.
can just
How
open it.
closely
Yeah.
you're following the topic of reference rate reforms. So A would be regularly, that you're actively preparing for the changes. B, occasionally following and just to keep up to date. Exposed to some information, but not really up to date. Or the D would be that you're for the first time joining, hearing on this topic. So that would be the answers. If you cannot do it in the poll, maybe you can write in the chat box.
Okay, the poll will now close in about 15 seconds, and then I will show the results. So let's see how you have answered. Otherwise, you can just write in the chat box also, as Mattia said. Interesting. Okay, poll results. So I will now show you the results on your screen. So then, Mattia, you'll be able to see them.
So it's pretty varied. For least would be that you're regularly following and actively preparing. And most is some information, but not up to date. So that's actually our role to keep you up to date somehow. Yeah, and then followed by occasionally following, but to keep updated. Or there are also some participants, 7 that answered, that are for the first time following this topic. With that, actually, I would like to give the word to Zilka. Also, David, if you can give her the presentation rights.
Of course.
So we can start with the webinar.
Okay, good. So Zilka.
Before we there will be 2 occasions for 2 interactions with questions. So because the presentation is split in 2 parts, so you're welcome to already write your questions to the chat box throughout. Just not to forget. We will collect it and we will try to answer it in one or the second part of the question session. So, Silka. I cannot hear you.
Just unmute you first. Okay, we should be able to hear you now, Silka. So.
Hello, good morning. As Matthias said, my name is Silka Jancic. I work at the Bank of Slovenia in the Banking Operations Department. I'm not directly involved in the interest rate benchmark reforms, but as you know, also central banks are following these issues because they are important for the monetary policy and also for the collateral stuff. So therefore, we decided to have a webinar together with you and to share some views and developments from the market. And maybe, of course, it's a good opportunity to exchange some views with you, with those that are following the topics more regularly. It was good to get a first expression from Matthias' side so that I can see that some of you are more familiar with the topics than the others. And I will try to adapt. And if there anything that is not understood well, of course, I would ask you to ask questions in the chat, or we can discuss it later when we'll have some time for discussion. Today's agenda is in 3 parts. First, we will try to answer the main question. So why reforms of the interest rate benchmarks, and what are the new requirements for the benchmarks? The requirements and also some recommendations were given to the market participants in the past. So we will go through the main topics from the past and the main requirements for the market participants. Then we will go to the recent developments. We know that in the recent years there were lots of topics discussed by the market participants and lots of initiatives given to them. There are working groups in different currencies that are taking care of the reform, and also important organizations and even central banks are taking part in these developments. So we will go through the recent developments and we will see what is now the status of the reforms. And of course, at the end, I will try to answer how to be prepared for the reforms. For those who have exposures, for those who just follow the reforms, or maybe for the individuals that you have loan agreements in using benchmark rates. So it's just an information that we would like to share with you and ask you if you have any views about the preparations or any suggestions. So if we start with the first part, I think the most important thing is why to have reforms. And it's important to understand why in the past some regulators decided to reform benchmarks that are here with us for so many years. We know that the benchmark rates are refer, of course, to those rates that are important and used in the different different contracts like EONIA, EURIBORs or LIBORs, those that are interbank offered rates, but that were reformed already in the past years. We know that the benchmarks rates play a key role in the financial system. They are important in the banking system and in the economy overall. There are so many products that refer to benchmarks, so it is really an important issue that we should take in mind when we are talking about the benchmarks, whether they are reliable, robust, and whether they really express the price of the borrowing on the market. If we look what happened in the past, maybe some of you are aware that there are some manipulations from the banks, especially using LIBORs rates. And some of the banks were also sanctioned because they manipulated with benchmarks and tried to get some advantage of quoting the rates. So the main question is, are the quotes, rates that are quoted and that are based on expert judgment really a good benchmark also in the future, or especially during the financial crisis when there is a big volatility on the market? That's why there were lots of recommendations that it's better to have rates that are based on transactions, based really on the actual trades, because they show the relevant price from the market. And because of the global financial crisis that happened in 2008 and followed, also a lot of banks were using other also secured transactions. They were getting more liquidity from the central banks, and that's why the liquidity on the unsecured market was not so important anymore. There was a declining activity in the market and, of course, lower liquidity in different products. That's why the reforms were even more needed, because those quotes were not really represented the actual prices. We know that we have quotes in LIBORs and EURIBORs, but the EONIA, the overnight interest rate, is based on transactions. And even the overnight rate, which is based on transaction, was really damaged with the declining activity and lower liquidity. And banks were leaving the panel. There is always a panel of banks that contribute to the calculation of the benchmark rates. And because banks were leaving the panel, they were not so involved in the market. They didn't want to participate because of the sanctions. And were really more doing with other trades, with secured trades. That's why this also had an influence on the calculation of the benchmark. There was quite a big concentration risk when some banks really had an opportunity to influence the final calculation rate. So that's here there are three main reasons why the regulators and other institutions were thinking of reforming the benchmark rates. We know that nowadays quite a lot of things have been done by the different institutions. Here there are mentioned some new requirements and recommendations. In 2013, the IOSCO standards were set. Those are the standards that were then used also in the EU benchmark regulation that followed later on. And those standards really related to governance, the quality of the benchmarks, and the methodology and accountability of the benchmarks. There are standards that are well known by the by those institutions that calculate the benchmarks, like the European Money Market Institute. And they need to follow the standards that were later on set in the benchmark regulation. And because of the financial stability view, benchmarks are important for the banking industry and the financial system. Therefore, the Financial Stability Board in 2014 published the recommendations that go in line with the IOSCO standards. And both those IOSCO standards and Financial Stability Board recommendations were then the basis for the EU benchmark regulation. I'm not sure whether you've heard about the EU benchmark regulation. This regulation is important for different players, not just for the administrators. Administrators are those that are calculating the benchmark rates, but the benchmark regulation refers also to contributors, to the banks that are sending the rates, and of course, at the end, also to the users. And most of the market players are users, like, let's say, even individuals having a loan contract using a benchmark rate. And the benchmark regulation set a compliance deadline of that was later on moved by 2 years. And this compliance deadline refers to benchmarks and is set at the end of December 2021. So after that date, reference rates will not be allowed to use unless they meet the benchmark requirements. And we know that there are some rates that today don't meet benchmark requirements. And market participants and users should think about it. And even central bank supervisor should have this in mind, because they are they are doing the supervision of the banks, and they need to know what kind of contract the banks are exposed to. That's why the central banks are quite active in this benchmark regulation. And here is an article from this benchmark regulation that applies to changes and cessation of the benchmark. And it says that supervised entities, and supervised entities are banks, of course, and some other entities, shall produce and maintain a robust written plans. So the bank should have plans setting out the actions, what to do in the event that the benchmark materially changes or cease to be provided. So banks need to have plans what to do after, let's say, 2021, when the LIBOR won't be on the market anymore, or what to do if the EURIBORs won't be available anymore. In the euro area, the majority of contracts are linked to the EURIBORs. The European Commission estimated in 2016, when it started to do the benchmark regulation, it estimated that about 180 trillion euro outstanding contract linked to EURIBORs were at that time on the market. And as I said, those contracts refer to loan agreements, securities, derivatives, different products that are on the market. And ECB in 2018, when it decided to implement overnight interest rate, it estimated that about 22 trillion euro contracts were linked to EONIA. You know that EONIA is also widely used, especially in derivatives, and it is an interest rate that shows us the derivatives instruments what to expect in the future about the interest rates. So the central banks are using OIS, EONIA instruments to predict the changes in the future interest rates. That's why the benchmark regulation, of course, is important, as I said, for all market players. And usually the benchmark reforms are under three pillars. As I said, central banks are involved, because the central banks are the ones who are developing risk-free reference rates. Overnight rates are usually the ones that are our operational target. So when the central banks are changing the interest rates, the first response from the market is shown through the overnight rates. Central banks are involved in developing risk-free rates, but they have no intention to have a bigger role in the term rates, like EURIBORs. EURIBORs should be left to the private market initiatives. Central banks don't have intention to have a big role there, but of course they are following the developments. In the second pillar, there are so-called interbank offered rates administrators. The administrator of EONIA and EURIBOR is the European Money Market Institute. And the administrator is strengthening the existing rates by underpinning them to the greatest extent possible with transaction data. As I said, the expert judgment that was used in the past by just quoting interest rates could be dangerous, could pose us to manipulations. So that's why also the EOSCO standard and the Financial Stability Board recommendations were to go in line with the transactions and to have interest rates that are based on daily actual transactions. We know that for the longer maturities, like for the EURIBORs for 12 months, it's quite difficult to be based on the transactions, because most of the transactions from the market are really short-term ones. The liquidity on the overnight segment is the most important, is the biggest. And then when we have a term interest rates, of course, with the longer maturities, there is not so much liquidity on the market. The third pillars are the working groups on risk-free rates. Those working groups on the risk-free rates give recommendations. They follow the whole reforms. They are giving, they are having different consultations with the market participants. and they are also developing fallback solutions. With the fallback solution, I mean the solution what to do if the current benchmark rates are not available anymore. So which interest rates to use if the current ones are not reliable or even if they cease to exist. This is all from the first part. In the first part, I just really went through the main requirements. And the second part is maybe a bit more interesting because it deals with the actual developments of the benchmarks. If there are any questions, of course, you can put it on the chat, but I guess that the first part is quite a general one. It doesn't go into details. I just wanted to give you the view why the reforms are important and what are the new requirements. Because it's quite important to know the basis. It's good to know the problems that triggered in the past. So when we are developing the new benchmarks, we should avoid the bad experiences from the past. So if we continue with the developments of the euro benchmarks, of course, the most important benchmark is the EONIA. And the European Money Market Institute decided not to go on with the EONIA review. We know that a lot of banks left the panel. There were 50 banks that left the panel after 2012. And when the last EONIA rate was calculated, there were 28 banks in the panel. So 15 less than in the past. But the problem was that the overnight market, interbank market, was not so liquid anymore. And there was a problem for the Money Market Institute what to do to strengthen this rate. In 2017, the Governing Council of the ECB decided to develop a euro short-term rate. The rate that is based on the data collected by the euro system for money market statistical purposes. And it currently has 50 reporting biggest banks. This rate is more reliable, it's more liquid, it's more robust, and is based only on transactions for the overnight maturity, but not just on the interbank market. Also, the trades with non-banks are included in this calculation. So the new rate, so-called Euro STR, started officially on the 2nd of October 2019, and the data are available on the ECB website. They are available on the T+1 day, but EONIA in the past was available on T day. So they are published with a lag of 1 day, and market participants need to adapt to this new calculation because we know the EONIA is often used in different products and it influences different calculations. So market participants had to adapt to the new calculations. The working group on risk-free rates also recommended to replace EONIA with this Euro STR rate for all products and contracts. If we compare EONIA contracts with EURIBOR contracts, we see that the market is much lower, the one that is linked to EONIA. But anyway, there are many products, especially derivatives, that are important for the market participants. And relying on the robust rate is an important issue for the central banks and all players on the market. because the new rate is now used instead of EONIA, and we know that there are still outstanding contracts that market participants signed in the past. The EONIA methodology also needed to be changed, and it was changed in that way that EONIA represents Euro STR plus a fixed rate spread of 8.5 basis points. This spread was calculated as a difference between the EONIA and Euro STR in the period of 1 year. And of course, the Euro STR is a lower rate than the EONIA because the methodology is different one. If we look at the data, on the first graph, we can see the EONIA and Euro STR. As I said, Euro STR is lower than EONIA. It's lower because of the methodology. The Euro STR data also include trades with non-banks. And non-banks are prepared to offer lower rates because non-banks don't have a possibility to put their deposits at central banks at the deposit facility rate. Now the deposit facility rate of the ECB is 0.50%, and because the non-banks financial institutions don't have this possibility to put their excess liquidity using this deposit facility rate, they are prepared to put the money on the market to the banks with lower rates. So that's why this spread between Euro STR and EONIA was needed, and it was calculated in the period of 1 year from April 2018 to April 2019. As I said, Euro STR was published officially in October 2019, but prior these dates, Euro STR was used as a so-called as a pre-Euro STR. It was produced in the test environment by the ECB, but with the same conditions like in the production. So this pre-Euro STR before the October is a reliable calculation that the market participants can use, and it was good to publish it even earlier before the official start of the benchmark, so the participants were able to get familiar with this new rate. On the second right graph, we have volumes, the EONIA volumes and the Euro STR volumes. And we can see that the volumes in Euro STR are much, much higher than the EONIA volumes. On average, they are 10 times higher. Now, the Euro STR volumes are more than 40 billion euros daily. So we can say that this rate is a reliable and a robust one. And of course, the detailed methodology of the Euro STR is published on the ECB website. Those who are interested in the detailed calculation, you can find the methodology that is transparent, that is shown to the public, and also occasionally tests are done so that this methodology really proves to be robust enough. Here you have also the Euro STR data and the number of trades that are shown. You can see it also that the number of trades are quite significant, but some days, if there are holidays, of course, there are less participants on the market. And according to the Euro STR methodology, there are special rules when the contingency procedures need to be used if the data are not reliable enough. All the procedures are known to the public, so we can say that the ECB is trying to be transparent in publishing this rate, to explain their procedures, and also doing the ex post checks of the procedures and reports that are then published to them and available for public. As we know, because we moved to the new rate, to the Euro STR rate, we know that there are many products on the market that need to be changed. EONIA is used in different products, in derivatives, securities, loan agreements, in different cash products. And here they are mentioned in the sense of the transition. We know that EONIA overnight interest rate swap transactions are important for the future expectations of the interest rates. So the development of the Euro STR overnight interest rate swap is also important. It's important for the central banks, for the market participants, for hedging, and that's why the Euro STR OIS transactions started quite early in November last year. The LSH and Eurex institutions, those two that are dealing with these transactions. When we are thinking about derivatives, we know that EONIA is still used in collateral remuneration, and it influences then the valuation, the derivative exposures, and settlement requirements. And the central counterparties plan to migrate to the new Euro STR rate in July this year. First, the plan was in June, but because of the coronavirus, they decided to postpone it for 5 weeks. So the big bank transfer is now planned in July this year. The EONIA is also used in different securities, mainly in CDs and European commercial papers. And the new papers already refer to Euro STR. There are also some CDs that were moved to fixed interest rates, especially in France. We know that there is a big CD market in France, and instead of using the Euro STR, they decided to use a fixed interest rate. So the practice is different, but of course there are also some other securities linked to Euro STR. And maybe quite a big segment that we haven't covered are the loan agreements. We know that lots of loan agreements are linked to EONIA, and especially unsecured cash products like current accounts, saving accounts. So here the banks are moving to the Euro STR, and we know the EONIA will be officially still on the market till the end of December 2021. The last publication is on the 3rd of January 2020, and after that date, the EONIA is not allowed to be used anymore. So this transition impacts the IT system and the daily procedures of the banks and different market participants. Another benchmark that is even more important than EONIA are the EURIBORs. As I said, the European Money Market Institute is an administrator of the EURIBORs. and it implemented robust governance and control arrangements for the EURIBORs. And it decided to use a new hybrid methodology which combines the transaction data and expert judgment. We would favor to have more transaction data, but as I said, for the longer maturities, for the longer tenors like 12 months, banks rely more on the expert judgment. The EURIBOR is compliant with the benchmark regulation, and it is not scheduled to be discontinued. At least now, there are different views from the market participants whether the EURIBORs can be on the market for long or just the medium terms. There are different speculations, but at least now it is a benchmark compliant index, and even after 2020 it will be on the market. But of course it depends whether the panel of currently there are 18 banks will still be there, will still contribute to the calculation. The benchmark regulation said that if the benchmark is a critical benchmark, the administrator can require the banks that are in the panel to provide the data at least for the 5 following years. So the EURIBORs won't disappear so quickly. Even if there is a crash on the market and the banks are not prepared to be in the panel, there are still 5 years that could be guaranteed for this benchmark. But of course, it depends, even if there are banks providing the data, it depends if the index is still reliable and robust enough, and if it really gives us the price of the interbank borrowing. We know that users need to incorporate new or improved clauses in their agreements, so-called fallback provisions, because we never know whether there will be an event of EURIBOR cessation or not, or if there will be a threat that the EURIBORs won't be reliable anymore. So we will focus quite a lot of on these fallback provisions, because we know that the banks, the other institutions that they have contracts need to change the contract. They need to put in the contract the fallback provisions to be on the safe side. And your benchmark regulations requires to have appropriate fallbacks provisions in the contract. In the following slides, we will see what fallbacks provisions are on the market. But just before we move to these fallback provisions, maybe just some basic information about the EURIBOR hybrid methodology that is now used. We know that in the past, the benchmark was based only on the quotes from banks, but now the benchmark is based on the eligible transactions, those that are settled on the T and T+1 and T+2 days. There are also some other instruments, not just deposits, that are taken into account, and not just from the interbank market, but also some other institutions are providing input to the calculation. So here you can see from the EURIBOR hybrid methodology what are the eligible transactions that are now used for the calculation. You can see that even short-term securities are taken into account because we need to have a more robust interest rate. So that's why eligible transactions were broadened. And here's some more information about the hybrid methodology. It consists of 3 levels. First, there are the underlying transactions of the defined tenor. So if there is 1 month EURIBOR, there are transactions exactly with the 1 month. Then there are transactions in the lying interest across the money market maturity spectrum. So it's a bit, let's say, longer or shorter maturity. And at the level 3, there are additional transactions that are based on the expert judgment or some modeling techniques. Unfortunately, when the EURIBOR moved to this hybrid methodology, there were expectations that more transaction-based data would be used for the calculation, but it has proven out that nearly 10 to 50% of the transactions are really based of data are really based on the transactions, and that a lot of expert judgment is still used. So that's why there is quite a big question mark whether EURIBOR hybrid methodology is sustainable for long term. We know that this methodology was approved. It's a compliant with the benchmark regulation. But anyway, some market participants doubt in the long-term sustainability of the rates. And as I said, users need to have fallback solutions. What to do if, let's say, the EURIBORs won't be available anymore, if they cease to exist or they are not reliable anymore. So here there are 3 important elements that we should think about it. First, about the trigger event. With the trigger event, I mean the event and fail date when the fallback will be applied, because the current interest rate is not reliable anymore. Then another element is a fallback rate. This is the rate that needs to be replaced, that replaces the current existing rate. And then, of course, the spread adjustment, because the new rates are usually based on the overnight. And if we want to replace the EURIBORs with the new rates, also a credit spread adjustment is needed. That's why now there are quite a lot of work to be done on the spread issues. This fallback solution for term interest rates are quite different ones. Then they can be calculating using forward or backward looking approach. Here you have 2 pictures of a forward or backward looking approach, and it's quite tricky which one to choose. If we choose to use a fallback solution, so instead of using EURIBORs, if we choose to use a rate that are based on risk-free rates, that are based on overnight rate, of course, we need to know which overnight rate to take, the one from the past or the one from the future. Because nowadays, EURIBORs shows us expectations of the rates that are on the money market. But if we are relying just on the overnight rates, let's say for a period of 3 months, we have 2 possibilities. To use a forward rate, the rate that is based on overnight interest rate swaps, or if we can choose another option to use a backward rate, the rate that is used from the daily calculations of overnight rates. They are so-called compounded rates because the interest rates are added each time when the compounded rate is calculated. And it's a big difference if you use interest rate at the beginning of the period or at the end of the period. We know that the special attention should be put to the retail customers, and that the interest rate should be known maybe in advance. It depends on different jurisdictions. It depends on the protection of the retail sector. So when we are choosing one of the methodologies, different issues need to be taken into account. Is the proposal was to use a backward-looking approach, and this proposal was given for the EURIBOR and EURIBORs, but not just for those two interest rates, but also for other LIBOR interest rates, and also the similar solutions were proposed on the American market and the British market and even in Switzerland when they want to rely on the backward-looking solution. But it's still not clear whether to rely on this backward-looking solution for all products. There could be both solutions used, one for let's say, for other products, then one for let's say, for the retail or some other products. So it is still not clear which approach is the most appropriate. The Euro Working Group on Risk-Free Rate is interested in forward-looking rates based on Euro STR overnight interest rate swaps. But of course, it is also analyzing the backward-looking methodology, and it is expected that this year the final recommendation should be given to the market participants. So it's still not clear. There were also, the working group was also asking for interest of the different institutions to calculate the forward-looking rates, but of course, at the same time, working on the backward-looking methodology. And the ECB and the Financial Stability Board are more supporting the use of backward-looking rates, based on, of course, on risk-free rates, on Euro STR, and some other rates also in other jurisdictions. I will ask you later about your opinion about this approach. But just before we have a discussion, maybe here is example of the EURIBOR generic fallback provision that was recommended by the working group, and it can be used nowadays, but we see that is really a generic. It doesn't say which EURIBOR rate which rate should replace the EURIBOR, because it is recommended to use a rate that is recommended by other institutions, and which institutions they are stated here. So it can be used in contract now, but definitely it's a broad fallback provision, and the market participants are still waiting for more concrete provision, which rate to use in case of EURIBOR, that EURIBORs won't be on the market anymore and need to be changed with another rate. When we are talking about the backward and looking solutions for the term rates, maybe it's good to have in mind that if we decide for the backward looking approach, we also need to know that the spread would be used, and a spread is dependent on the market volatility, and EURIBORs recently are quite volatile. There has been quite a big volatility on the market since September, but at the beginning the rates were more volatile because of the different market expectations. and because of the change of the methodology, but later on in March, we see a big volatility because of the coronavirus. And banks are really not ready to lend on the market. They're more sitting on the liquidity. That's why the interest rates are much more higher than they used to be. The working group on risk-free rate has different recommendations so far. Here they are stated, and you can use them and check them on the working group risk-free rate website. You can see the recommendation that was given for the EURIBORs and also the recommendation for the EONIA and EURIBOR. And of course, here you can see also the reports and the recommendations that are envisaged for this year. We are waiting for the final fallback clauses. As I said, it is expected before the summer. And the term structure methodology that then will be used, the spread calculation and that kind of things. With this part, I would like to close the second topic from the agenda. And I would like to encourage you to participate in the discussion. I'm interested, what is your view regarding the future EURIBORs? Do you see the rate as a long-term solution or a medium-term solution? When you are deciding about this option A or B, that will be given to you to vote. I would like to remind you that there are in the panel, there are just 18 banks. In the past, there were 26 banks that left the panel since 2012. So we should know this when we are thinking about the long-term or medium-term solution. We should take into account that the methodology was changed, but still a majority of trades rely on the expert judgment. And if there is a big volatility on the market, this expert judgment can be questionable. And there is another question that I would like to encourage you to participate and answer it. It's a question about the EURIBOR's fallback solution. My question is, which of the approach do you prefer? The backward looking one, then you are using rates, let's say, from the backward, and the rate is known at the end of the period. Or would you prefer a forward-looking rates, the ones that would based on derivatives on overnight interest rate swap based on Euro STR? We know that we need to have a liquid derivative markets, and then we can use it. At the moment, the market is not liquid enough, but of course we can expect that the market will develop over time. And of course, there is another possibility that you have no clear preference. I will ask David to pose the questions. And
okay, right away.
Let's wait then to see the results and your opinions. You can also put it on the chat if you have opinions or your views about it. I think it influences all of us, and it's good to discuss and exchange the views. Thank you.
So here we go. I will pose the first question first and give you a minute to answer it.
David, it's a wrong question. On the it's the first one.
Yeah.
You should give the one from my presentation. Yeah, this one is okay.
Yeah, this one. Yeah. I was just saving the previous one. So go ahead, a minute.
So what is your view regarding the EURIBORs? As I said, they are not planned to be seized. They are complied with the benchmark regulation, but anyway, some market participants have doubts whether the EURIBOR will stay on with us for long term. There are quite a lot of doubts whether the EURIBOR will be with us for, let's say, for medium term, for up to 5 years or something like that. And that maybe during that time, some other solutions will be appropriate. I don't want to mislead you, it's up to you.
Okay, it's good. We have 22 answers already. So don't forget to click submit after you choose your answer. So 23, we're getting there slowly. So I will close the poll in a couple of seconds. So go ahead and hurry your answer, and then I will also show the results. So closing the poll. And you should be able to see the results now.
Okay, I can see that majority is for the medium-term solution. It's my view also. I would choose the B because I can say that 18 banks leading the such important interest rates, even with the change methodology, it's questionable. So we will see what will happen in the future.
Okay, good. Are you ready?
I suggest then to go with another question to see which fallback solution are the most appropriate. As I said, they could be backward-looking or forward-looking solutions. Both solutions have pros and cons. Some are maybe more appropriate for retails or for some other products. Maybe forward-looking are more appropriate for accounting or for risk management issues. So it's up to you, really, what do you need term rate to be used for? But we know that a lot of EURIBORs are used in long contracts, but on the other hand, they are also used in derivatives, and derivatives are quite important for the interest rate expectations.
Okay. Let's see. I'll give you a couple of more, let's say 15 seconds more to answer. So if you don't see the poll, just under the chat, you have the polling section. You can click on it and then submit your answer.
As I said, also the working group on risk-free rate, the Euro working group is not sure which approach is better. The working group is going to give us some recommendations. Maybe even both approach would be recommended. It depends on the different products. But if we look at the experiences from other jurisdictions, like I said, more backward-looking solutions were proposed for the market participants.
The poll is closing now, so we'll be able to see the results in a few seconds. We got 30 answers, so let me just apply the results now. Here you go.
Okay, I see it's more for the forward-looking than the backward-looking. I guess this is because we all know that the term rates should give us some more evidence about the future rates, and forward-looking is the option that responds to our needs. If we need to have a rate that really underlines the forward rates that we are looking to. As I said, the working group had on Euro risk rates had a consultation last year, and there were lots of answers where the market participants were supporting the OIS quote rates to be used. But of course, the derivatives market needs to be liquid enough to use such calculations. There were also expressed some interest by different institutions to calculate the forward-looking rate, and I guess that in the future there will be an option to use it. But of course, also the backward-looking is not excluded yet. As I said, maybe even both options will be given to the market participants. So thank you very much for answering it.
Thanks. As you saw, we didn't receive many questions in the chat, so we turned the table around and we are asking participants. But there is one, Silka. What would be the better rate for citizens for mortgage calculations?
Yeah, let's see which approach would be better for mortgage loans. As I said earlier, there are some consumer protection laws in different jurisdictions that says that the interest rate need to be known in advance. But of course, it depends on jurisdictions. I'm not the right to judge which one would be better because I'm not an expert for the mortgage loans. But anyway, I think it's up to the counterparties which rate to choose. If they are backward looking, it doesn't mean they are looking really backward. They are just looking backward for the tender maturity. If there is a 3 months EURIBOR, then the backward looking would mean the overnight rates in the period of 3 months. Therefore, even backward looking are still covering the actual market rates that are in this period. But of course, the final calculation rate will be known at the end of the 3 months. And that is quite a big question whether this is allowed for the retail customers because of the customer protection. Otherwise, if you look at the forward-looking approach, you will have an interest rate known in advance at the beginning of the remuneration period, but this interest rate will be based on the derivatives, on the overnight interest rate swaps. So if this market is liquid enough, and we expect it to develop, of course, then it could be a reliable rate that also shows us the market expectations in the future. So it's quite tricky to say which one is better, which not. It's tricky also for the working group how to decide. I guess that maybe even more opportunities will be given to the parties of the contract. At least also in Switzerland, they are thinking about many options that could be given to the customers. We know that the backward-looking rates for the American market, for the British market, and for the Switzerland are also already calculated. The so-called compounded rates are calculated for different tenders from 1 week, 1 month up to 12 months. So they are already available, calculated from the overnight rates, but without a spread. So they are just overnight rates with compounded interests, but without a spread. So even a methodology for a spread needs to be developed. Is the proposed to use a 5-year spread? A 5-year spread, so to have a really reliable spread, not to depend on the volatility movements in the specific period, and to be fixed in the past. So we will wait for the working group on Euro risk rate what to recommend. We should take into account that overnight rates are just overnight rates. They don't give us a term premium. So that's why the spread needs to be added.
There's no straightforward answer to it. Yeah.
Unfortunately not. Yeah.
There's a comment, yeah, that there's a lot of mortgages in Lithuania and
I see that even in Slovenia, there are lots of mortgages of using EURIBORs, 3 months and 6 months. When I was looking at the statistical data warehouse of the ECB, there you can find data according to the countries of the loans and what kind of interest rates are used. In Slovenia, we are one of the countries with the highest share of variable rates. So I guess the similar is in Lithuania. I don't remember it, but I was searching through the data, and there are some countries that are more exposed to Euribors than the others. I know that in Germany, the percentage is more in favor of the fixed rate. So there is more practice to use a fixed rate than the variable rate. But anyway, I think it's going to be quite a big issue for the counterparties, for the banks to change all the contracts, to give a new fallback clauses that would really be understandable. Because if you choose a forward-looking approach, maybe it's quite difficult to explain it to the citizens, because it's based on derivatives, and usually ordinary citizens are not so familiar with derivatives. So there are pros and cons which rate to be used, but at the same time, this rate is available at the remuneration period. So there is no lag, it's available in advance, and the customer knows which rate is going to be used for, let's say, the period of 3 months when the calculation begins.
Tilka, there's still one question, which overnight rate is compounded, but I would like to actually encourage everyone. If you have a question, you can write it down, but you can also tune in. That means unmute yourself, and we can have some more interaction this way. Maybe we're still available for a question or two, and then we will need to move on for the second part.
If I answer the question of the overnight rate and the compounded which rates, I said that there are in the different jurisdictions, Fed started to publish backward-looking rates in March this year. In UK and in Switzerland, they decided even earlier. So there are publicly available compounded rates that are calculated from overnight rates. In the US from the SOFR, in UK from the SONIA overnight rate, and in Switzerland from TONAR overnight rate. And there are even some web providers that they offer you compounded rates for different overnight rates, even for Euro STR. If you look at the internet, you will find the providers that they compound SONIA, SOFR, Euro STR, and TONA for different tenders from 1 week to 12 months. Let me see another question.
From Zorica, that's the role of the Bank of Slovenia in this transition from EONIA or the other NCBs.
In Bank of Slovenia, we haven't moved to Euro STR yet, but we have intention to do it. EONIA is still a compliant benchmark till the end of 2021. And of course, we intend to switch to Euro STR in all our loans that we have. But those are the contracts that we have, like with Security Depository House, that we have with the Ministry of Finance. We don't have a lot of contracts with others using EONIA benchmark. It's another question in the same segment is it completely left on the bank's initiative? Of course, we are a supervisor as a central bank, but according to the benchmark regulation, there are national competent authorities that should supervise market participants regarding the benchmark reform. For each country, if you look at the benchmark reform, you will see also the data which national competent authority is responsible. And in Slovenia, it's not a central bank, it's a securities market institution. So they are the ones who are responsible for checking the appropriate fallback clauses that the market participants will use. And they are the ones who can ask the market participants if they have robust plans that they need to be already organized since January 2018. So it depends how it is in Croatia, which national competent authority is responsible for checking. But of course, anyway, the central bank needs to be involved, because even the supervisors, they are measuring the risk of the commercial banks. They are looking at the interest rate risk and also other risks that are linked with these benchmarks. So they need to be familiar with the ongoing issues.
Okay, thank you. I suggest, if there's no other question, also that we move on. So we will have a little bit of second session also in the end.
Sorry, I have one question. Okay, here is George Dmitrievich from the National Bank of Serbia. Cilka, thank you first of all for the great presentation. I have a question regarding banks that are a part of a panel for forming EURIBOR. You said that there are 18 banks existing right now there. So is it possible that the panel of banks will be extended maybe in the future period? That would be the first question. And the second question, you said that banks, even if they leave a panel, they have to quote in the 5 years following period. So does that mean that EURIBORs will still be on the market at least in the period of 5 years? Thank you.
Yes, thank you for the question. As I said, comparing with the panel banks in 2012, we can see that 26 banks left the panel. And it's true that currently there are 18 banks. We don't know whether the panel will be broadened or not, because there is an administrator, European Money Market Institute, who is responsible for the panel, for the calculation, for the governance, etc. So it's up to them whether they decide to broaden the panel or not. But as we know from the past experience, the banks were not really so interested in being in the panel because of the stricter regulation, because of the threat of the penalties in case of any manipulations. And we know that for the longer tenors, there is less liquidity. There is enough liquidity for the 1 week, for the 1 month, but longer tenors don't have enough liquidity, so they need to have their expert judgment, their models used to quote the interest rates. Even with the hybrid methodology, there were some different figures, but it was said that about 15% or even less of the interest rates depend on the transactions. So I'm not sure whether there will be an interest from the administrator to broaden the panel or not. Because of the crisis, there is less liquidity on the market. Even the corona crisis influences the volatility of the EURIBORs. And banks are, because of the precautionary reasons, sitting on the liquidity, not being ready to lend it on the market. And because of the regulation issues, they don't want to be exposed to the others on the unsecured market. So it's not just the crisis that influences the lower liquidity, it's also the regulation that is there that doesn't encourage banks to lend to the others. So I'm a bit skeptical whether there will be any broadening of the EURIBOR panels, but let's left it open and we will see what will happen. And regarding the 5 years period, yes, the relevant competent authority can require contributors, those banks from the panel of critical benchmarks, to contribute to the panel for a period of 5 years. So we can say that at least for 5 years we are safe. But are we safe enough is another question. Because if there is a really low liquidity, if there are benchmarks really based on expert judgment, it is questionable whether they really represent the price on the market, whether they are really robust and reliable enough. So my question is not straightforward. I would say that anyway, banks need to work on fallback solution, and that is also a recommendation of the Financial Stability Board, of the ECB, of the Euro Working Group on risk-free rates. And I guess it's also the benchmark regulation that requires banks to have fallback solutions. If I look at the loan contracts today, because we use loans also for the collateral issues, and I occasionally go through the contracts, I can say that even today, the banks have some fallback solutions. They're not the ones like proposed here, but they have some clauses what to do if the EURIBORs are not available anymore. They can change the contract, they can reach an agreement for another one, they can use a replacement for the EURIBORs. Even now, there are some fallbacks in the existing contract. But the benchmark regulations requires the fallback solution in the contracts. So I guess there will be some solutions given to the market and some clauses. We are waiting for the Euro Working Group. I expect before the summer they should develop some fallback solution, not the generic one because it's too generic, but some more concrete ones. I hope I answer your question, but
yes, of course. Thank you very much.
Thank you for your questions. Circa, how now do we prepare for the changes?
I have a third part of my presentation. It's about the preparations, how to go on, how to be prepared. David? Yeah.
Let's go ahead, Circa. You should be able to share.
Okay. Yes. So the third part is how to be prepared for the EURIBOR's reforms. As I said, the benchmark regulation entered into force in January 2018. And even now, it requires to have some solutions for the cases if the benchmarks won't be available anymore. The benchmark regulation requires the supervised entities, those are of course the banks, to have plans and to develop the plans over time. At least these plans should show what organizational precautions have been taken to procure the benchmark event and how a replacement benchmark is supposed to be determined. I know that it's quite difficult to have a plans if there is no concrete solution from the working group anymore. But anyway, there are some things that you need to do now, that you need to prepare in advance. Here are the working group risk-free rate recommendations. Those recommendations are divided into 3 parts. First, of course, you need to understand the exposures and risk. You need to know what kind of exposures of rates of different interbank offered rates do you have. Which benchmarks, EONIA, LIBOR, which LIBORs, EURIBORs, what kind of products, and you need to do the risk assessment and consider regulatory obligations. Then the second thing that you need to do, and of course you can do all the 3 things together, is to actively reduce reliance on EONIA, because EONIA won't be allowed in 2020 anymore. You need to reduce reliance on LIBOR rates, because LIBOR rates won't be allowed in 2020 anymore. And of course, those rates that will be seized, but we don't know now if the EURIBORs will be seized, and we said that even in case of being seized, we have a 5-year period that we can rely on. But of course, there are pros and cons whether this 5-year period is safe enough or not. So you, as a user or as a bank, you need to go through the products and you need to start informing your clients about the possible solutions in the future. Instead of EONIA, you should straight away go and use EURO-STR where possible. And if you have EONIA contracts with a maturity beyond 2021, of course, you need to put the fallback solution in the contract. Regarding the EURIBORs, there are still a lot of uncertainties which fallback solution to use. There is one general clause that I would say it's too general, but this year we can expect some recommendations from the working group, what to do in the future, which fallback solution would be appropriate, and maybe even for which products. But of course, the working group also encouraged participants to follow their recommendations. All the recommendations of the working group on risk-free rates are publicly available on the ECB website. If you haven't seen it, you can just put in the browser Euro risk-free rate working group, and you will see that there are lots of material published on the ECB website. The ECB is not actively participating in the working group. It's just an observer in the working group, similarly as the European Commission. But of course, it gives the secretariat to the working group. So that's why all the materials are publicly published on the ECB website. And you need to follow their initiatives. And of course, it's good if you can also participate in their consultations. And there are a lot of banks that are participating in the group and subgroups. Those are the biggest European banks. In Slovenia, we don't have any bank participating directly in the working group, but there are some other banks like Intesa, UniCredit that have branches in Slovenia, and their mothers holding companies are participating in the working group. And of course, you should raise awareness about the reforms also to the top management of the bank, of the institution, so that the people are aware about the ongoing issues, about the need to change the loan contracts, to prepare an annexes with the appropriate fallback solution. It's not an easy work. It's going to be a lot of paperwork, a lot of IT processes that need to be changed, a lot of programs for the loan contracts, for the different products in the future that you will need to deal. So I think it's not good to wait. It's better to inform the counterparties now, to participate in discussions with them, and of course to advise them to follow the working group recommendations. We as the central bank, we are not involved directly in the reforms. We are getting the materials from the ECB, and we are distributing the materials to commercial banks. We are more involved in the Euro STR issues, because nowadays there are 50 banks participating in the Euro STR calculation, but in the future we expect that the panel will be broadened, also covering all countries, because nowadays just 10 countries of the Euro area are covered. Here there are some other questions for discussions. We know that fallbacks provisions need consent of the both parties of the agreement, and this might be difficult to achieve. If you have a contract and you want to change it, you need the consent of another party. Otherwise, you cannot change it. So there are different ideas how to do it, or maybe there are also initiatives that legislative solution would be better. There is a proposal from the different Euro associations that are planning to send it to the European Commission, that the legislative solution, the so-called EU new regulation, should be in place, at least for the cases where you cannot reach agreement with a counterparty. Because if you cannot reach agreement with the counterparty and the interest rate is not reliable anymore, what should you do? You cannot have a risk and that inappropriate rate will be used. You cannot risk disputes of the counterparties and maybe courts. It's better to have a solution what to do in case if the counterparty are not ready to sign annex to the agreement. So my question for discussion would be, what is your view? Would it be easier to have a legislative solution? Yes or no? Or do you have a mixed views? Because we know that the counterparties should be first the one to decide what to use. And banks probably will give an opportunity to counterparties if there is a possibility to reach an agreement on which interest rate to use. My opinion would be to use a legislative solution really only for the cases, and that is a proposal when there will be no agreement of the parties. So I would encourage you to answer what is your question, or you can also comment and add your views. You can speak up with us if you have any strong views whether to have a legislative solution or not. I would say it's quite an elegant way to have some backup if there is really no opportunity to reach an agreement with a counterparty. So David, you will follow.
We're getting results in. So again, if you don't see the poll, just go underneath the chat and click on the polling. choose your answer, yes, no, or mixed views, and just click submit. So yes, we got 21 answers already, and they are still coming in. So we will just keep it up for another, let's say, 15 seconds.
With this legislative solution, we don't want to influence the private market. It's up to the market. If they decide to use another benchmark, why not? It's up to the counterparties of the contracts. But we just want to think about the solution, what to do if the agreement is not possible.
Okay, we have stopped the poll, and I will now show you the results.
Okay, so the majority is in favor of, but I'm surprised there are still a lot of mixed views. Those that you have mixed views, you should know that if the proposal reaches the European Commission, it will refer only to the cases where no agreement has been reached. So, as I said, primarily the initiatives is in the hands of the counterparties. They can decide what to use if no reliable benchmarks are there anymore. This is not a public initiative yet, but I have some information that the European Commission will discuss about this year. There is not a lot of time left, so let's wait and see. I guess even for our banks, when we are talking with the banks through our banking association, there were views that some legislative solution would be preferable, especially because sometimes it is difficult to get a consensus with all the counterparties. We know that there are so many products with retails, with bigger counterparties, and if you cannot reach the agreement and the benchmark is under threat, it's better to have at least some backup solution so that the contract is going to be valid until the maturity. David, if I may, I will then follow with, I guess, 2 or 3 slides and then finish.
Go ahead, you should be able to share.
So I guess we are nearly at the end of this webinar. Here is only a transition timeline. It's also published at the website of the Working Group on Risk-Free Rates. We know that we have not much time left, especially if you take into account all the fallback solutions that need to be solved this year. And then if you as a counterparty, as a commercial bank, need to change all the contracts, the IT system, the daily procedures, it's quite a lot of work for the year 2021. At the beginning of 2020, EONIA is discontinued, but EURIBORs are available still. And if you have LIBOR products, LIBOR rate is also discontinued. So you need to have some fallback solution, at least for those two. But also there is a recommendation to have a fallback solution also for other rates, like for EURIBORs, even if they are still published and officially there, it is useful to have some backup solutions. Someone of you asked me on the chat if the presentation will be shared. Yes, the answer is that will be shared on the, I guess, CEP website, so you don't have to worry about it. All the slides will be given to you. And I guess this transition timeline is quite important for all of us. Just before I finish, I want to also pay some attention on the LIBOR reform. You know that LIBOR is quoted in 5 different currencies. Euro currency is not stated here because it was covered earlier. But other currencies, of course, are managed through the different working groups from different jurisdictions. You know that some central banks decided to have a risk-free rate that is from the repo market, that is secured. The ECB decided to have an unsecured ones. There are pros and cons for different rates, but you know that the euro area is not a harmonized. There are different repo securities, so it's better to have an unsecured rate. But of course, some cons weighted the decision of the other central banks, so they decided even for the secured overnight financing rate. As I said earlier, the compounded SOFR, SONIA, SORON are already publicly available, and you can find it on the working group risk-free rates websites. If you are interested, they are there compounded for different tenors up to 12 months. The risk-free rates working groups are updating their information on their websites, and you can also easily find them if you just put in your browser the name of the working group, and you will find all different materials. There are too many different materials, even too much to study, because there are so many consultations and a lot of things haven't been really decided for the term structure rates. So this is all from my side. If you have more questions, of course, you are always welcome. I didn't go into details about the LIBOR reform, because even the euro rates reform is quite complicated and detailed, and the majority of euro counterparties are linked to the euro rates, but of course we know that the US LIBOR is the most used worldwide, so it's quite important to be familiar with the US LIBOR reform and to follow the initiatives from its working group. This is all from my side. Mattia, if you follow, if there are any questions more on the chat, we can check.
Thank you very much, Tilka. I think not yet, still all from your side. Yeah, I wrote down. If you have any questions, you can now unmute yourself, tune in, and we can discuss a little bit more. We will still leave some time for that. Yeah, if you don't have the possibility of a microphone, then you can use also the chat box. Maybe we wait a little bit if there is a question or two, and then we'll see.
I'm not sure how the participants are really involved in the benchmark reforms, but I guess that majority of them are not directly involved. As we at the central bank, we are following the initiatives, we are following the working group's work, but we are not really involved. We have some EONIA exposures that we need to switch to the Euro STR, but otherwise we are not really exposed to the benchmarks. I guess there are more commercial banks. They are the ones who need to do the majority of work in the future. And of course, sometimes there are also questions to the central banks, maybe to the people that work on the market operations like I do, or maybe to the people that work on the in the supervision. They need to be familiar. And last year, the EBA, European Banking Association, also asked the biggest banks how they are prepared for the transition. So in last July, there was a questionnaire to the commercial biggest banks, to the systemically important banks, to answer and explain their preparedness for the transition. Otherwise, I guess we have covered quite a lot. Even we have even prolonged our webinar. If there are any questions, you can also ask us later or send it to our emails. I will be glad to share or answer it. I have some contacts also with the banking association in Slovenia, and occasionally I participate in their meetings as an observer to be familiar with the ongoing issues. But of course, lots of work needs to be done by the private sector and not by the central banks. So I'm just looking for the new recommendations of the working group and maybe to see if there will be any response of the European Commission for the legislative solution. That could be also an important event for this year. But I guess for all of others who have exposures, the final concrete fallbacks clauses are the most important.
Thank you very much, Silke, again. I hope everyone enjoyed this webinar. Actually, I'm posting right now. Please let us know how you felt about the webinar. There's a survey that you can fill out. We really appreciate your feedback, especially because, as I said, this is what we plan to keep you updated in the future as well. So please give us your thoughts on that. You will receive an email from us. Also, you will be given the presentation, the link to the presentation, and again this survey to please fill out. So that's for now. Should you have any additional questions, please let us know. We are available ever more online now. So we are there for you. And just keep in touch and follow our program. That's what I would say.
Okay. Thank you very much to everybody and good luck with the reforms.
Thank you. Goodbye.
Bye-bye.
Bye.
Bye-bye.